Hi, I am Anna. I come from www.ntvforex.com. How much recovery is enough analysis http ntvforex.com news ID D6D98799 2021 07:57 p.m. Outlook. The upcoming news today includes mortgage applications and JOLTS. We know mortgage applications are soaring, but JOLTS is another matter and may depress sentiment. The consensus is for a mere 111,000 increase in job offerings versus 518,000 in July. The Bank of Canada meets and is forecast to sit on its hands, with the evolving oil story of more impact on the CAD. Mexico and Brazil report CPI. There's little here to draw attention from tomorrow's ECB policy meeting. Will the ECB join the US in adopting average inflation, and will Lagarde complain about the too strong euro? Don't forget that former ECB chiefs Duisenberg and Draghi each used specific language to complain about the euro, most notably Duisenberg's brutal rise. The consensus holds there will be change on the inflation target, but that doesn't mean the ECB would not talk about increasing QE, which is, after all, the real meaning of the Fed's so-called policy change. As Draghi said, whatever it takes. Politically, however, Lagarde is likely to restrain any impulse to punch back, for two reasons. Don't give Trump any excuses to make trouble on trade, and besides, he will likely be gone in 2 months. Attention goes to the US stock market, so violently divorced from economic reality. Okay, tech is fairly pandemic-proof, but that can never justify manic price gains of 20-40% in a short period of time. Manias are followed by panics unless the mood becomes one of buy the dip, which seems to be the likely outcome this time, judging from the recovery in futures. That doesn't mean we won't get a crash, as Gundlach said. Bloomberg. The S&P is in nosebleed territory. Just not this week. And watch attention turn from equities to the fixed income sector, where safe haven buying has been driving yields down, but in a crazy, choppy way that can't be good. See the chart in the chart package. We may be due for more if enough folks get hot and bothered by the debt outlook, which is indeed dire. This week we are going to get hard numbers on the US debt, which will exceed 100% of GDP for the first time since WW2. See the chart from Quartz. As we should all recall, Fed Chief Powell said back in May additional fiscal support could be costly, but worth it if it helps avoid long-term economic damage and leaves us with a stronger recovery. Bloomberg has reported that more businesses will fail during this pandemic than any time in history, including the Great Depression. The CBO Congressional Budget Office predicted the deep part of the recession will last at least 2 years, but JP Morgan Chase says it will take at least 10 years for the economy to recover. So, you have to ask yourself, how much recovery is enough? Stumbling along in a recession could become very discouraging to business, consumers, and investors alike. Do we need a steady diet of good news and something else? So far we haven't heard of moral hazard as a factor, but surely as companies and banks strive to get to pre-pandemic levels of income, moral hazard it will be. You have to wonder if the CBO has penciled in the cost of bailouts and fraud. We hear about fraud once in a while, like the Florida guy who bought a Lamborghini with his PPP loan, but the UK is far ahead of the US on that score, naming names and numbers. A 3.5 billion when somebody else can be counted on to pay your debts, you become less prudent. That's moral hazard, and boy, are we facing it now. Bottom line, while high debt levels have not affected the dollar in the last few decades, it might be different this time. As we noted last week, increasing the deficit during the Bush and Reagan years didn't drive the dollar down, nor did reducing the deficit drive it up in the Clinton years. But the pandemic changes everything, doesn't it? A 10-year recovery cycle is awfully long for impatient Americans and their politicians. We should probably be asking what percentage of debt is acceptable to the voter and the International Investment Manager. Is it 110%? How about 120%? Japan has 230%. Then there is the question of timing. Do it now or wait until everyone is scared out of their wits? So far the US debt is a background factor, but gird your loins. It's going to be fun seeing how investors seek a safe haven in the very place that is deemed no longer safe. Assuming the stock market doesn't crash this pardon me, correct or pull back, there are still plenty of reasons to see the dollar firmness continuing. It's not endless, though. We can easily get a pullback of the pullback, meaning the euro in particular can break the channel bottom or some other indicator Bollinger Band, Ichimoku support, hand-drawn support line, etc., and then bounce back up. This is the big risk today. We should apply the same reasoning to the pound. As we keep seeing, the UK creates its own crises and then sterling defies logic and economics by refusing to fall. Keep your eyes peeled for a breakout in the dollar-yen to the downside. It's meandering along without doing anything impressive, but the risk-off sentiment should spread to the yen any day now. US politics. The Atlantic magazine has a story on why the Trump base stays with him, despite everyone knowing full well he is a repulsive, sleazy, lying fraudster. It's because they hate the Dems so much, buying into at least a few of the stories the Republicans tell. The Dems will build Section 8 housing in your suburbs, bringing crime. The Dems engage in child porn and trafficking. The Dems will open the border to everyone. And so on. Never mind that most of it is improbable and or just plain stupid. This is an excerpt from the Rockefeller Morning Briefing, which is far larger, about 10 pages. The briefing has been published every day for over 25 years and represents experienced analysis and insight. The report offers deep background and is not intended to guide FX trading. Rockefeller produces other reports in spot and futures for trading purposes. To get a 2-week trial of the full reports plus trader's advice for only $3.95. Click here. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.